guys, happy Friday. Welcome back to Sin City Crypto Live. My name is David. I'll be one of your co-hosts, and today, like every single weekday, we're coming at you live from our studio here in the heart of Las Vegas, Nevada, with our daily live show. We have an exciting show today. We got boots on the ground, and by boots, I mean just two boots, and that's Robin. He will be joining us live from Bitcoin Miami. Who will he bring on the live show? Will he run into anyone famous? Perhaps Michael Saylor, perhaps a politician. Who knows? You're going to have to stay tuned to find out. We also have Jerome Powell spoke today. Is a pause coming? We're going to discuss that. We have some news on the White House and what they plan on doing with crypto. And we have some XRP Ripple news. Is a settlement coming? But first, before we get into any of the content, I'd like to introduce you to your other co-host, my man, Forrest. Let's patch him in. Forrest, how you doing, my friend?
Doing well. Thanks for having me on as usual.
Hey, man. Pleasure is all ours, brother. So how you been? You been good? It's been a pleasure to host a show with you this week, and I just want to make sure you're not getting tired of me, tired of Robin's antics, or tired of Rocco.
No, never get tired of Sin City Crypto. It's actually my favorite part of the day and favorite part of the week when I come in on the normal schedule on Fridays. But yeah, favorite part of the day. Look forward to it all the time, and just glad to be here.
Forrest, you're our favorite, and we love you as well. Now, Rocco, let's patch in Mr. Miami Vice himself, and I'll show you. Robin, where's that really cool shirt you had yesterday? Oh, he's muted. There we go. What's up, man? We got to get the hola. Okay, I cut you off again.
What's happening?
What's up, man?
It's your boy, Big Rob, here in Miami. And so this is technically day one, kind of like day two. Day one, yesterday was our industry day. Today is the first day for general admission. So got out with the industry peeps yesterday. Got to go to some of these cool after parties. And right now I just kind of got here, got situated. And Michael Saylor just had his keynote speech. We were checking that out. Lots of alpha. Did an interview this morning as well. So we got a lot of content coming up. Really excited. But I do want to say that for all of you watching, hit the damn like button. And then also, drop your name in the chat. If you're new here, say hello so I can drop an hola back at you. I don't have access to the chat, but I'm just gonna drop holas just sporadically and randomly. That's what I do.
That's called Tourette's.
And we're gonna give you some inside perspective from Bitcoin Miami. We got a lot to cover. There's mining. I'm gonna just give you like a 360 panorama here. So we got like NFTs. Ordinals are a big thing right now. There is mining is a big part here. We got all kinds of like games and stuff. Let me show you this little NFT thing. This thing's kind of dope. So lots of NFTs, ordinals, and you can see you got like a art exhibit in here. And then, yeah, I think it's a little different than it was last year. Little NFT presence in Bitcoin Miami last year. This year, it's definitely a thing. You know, I realize after talking that this ordinals thing is not by any stretch of the imagination a gimmick. I think this is here to stay. And so if you're in the NFT community, you're looking for maybe the next thing, this is it. The ordinals is it, man. And it's not a gimmick. It's not a bunch of nerds. There is people building. There is all kinds of stuff here. So that's one of my first takeaways. Either way, I'm gonna patch in randomly. I'm gonna try to find some cool people to talk to. We got a couple people that we're scheduled to meet with. So we'll be checking in with you live. But until then, yeah, hold it down, guys.
Wait, don't let him go yet. Rocco, wait. Rocco, pull up my laptop. I need to ask him about this. Rocco, just show the picture here. Well, what is this?
Oh, man. Yeah, boy, look at sweet.
What is this?
Dude, you know what? I hit the streets. I hit the streets with that shirt on. I probably had maybe 1,000 compliments. Maybe 2 or 4 or 5,000
face?
compliments. Dude, It was it had rhinestones, it blinged. You know what? You're gonna go to Miami. You gotta do it. You gotta do it in fashion.
Start calling
gotta
you
do
Robin
it
Hart.
right.
Start calling you Robin Hart.
Dude. Oh man, you're in Miami. You got to dress the part here, you know.
Oh, my bad.
Yeah,
Sorry.
like, what is this? Like, look at this thing, man. It's like a house of cards. Look at that.
That's what these
Kinda
meme
cool,
coins
huh?
are built on. It's interesting.
Yeah.
Bet coin. Okay.
Yeah, I don't know. Anyways, I'm like overwhelmed with all like the stuff to take in here. So, all right. Well, anyways, I'm gonna patch in with you guys here in a moment. Just ring the bell and I'll pop in.
All right. Be ready. We're gonna patch you in. All right. Forrest, what are your thoughts on this? Is this something you would ever wear, or if you wouldn't, how much would someone have to pay you to wear something like that?
Well, look, my wife would not let me wear it, so
That's a good wife.
I don't know
That's
if
a good
I'd get
wife.
out of the house with it, but to each their own. I think Robin rocks it well. To be honest, I think if anyone can pull it off, it's him.
Forrest, that's so kind of you to lie like that. You're such a good guy. Robin, when I saw this picture, I'm like, oh god, he's gonna get roasted.
Look like the peacock,
Yeah, peacock. Someone said that in the comments. So like,
Out of
at least
place,
it's a
because
good way to
usually
get
it's
noticed,
Flamingo,
you
no?
know? Yeah,
Flamingo is in Miami usually, right? But
Flamingos are not in Miami. They're in no idea where flamingos are.
Florida,
But
whatever.
I would like to, before we move forward at all, I would like to give a special shout out to channel sponsor today's show. And every show this week and every show next week will be brought to you by Cam's Blue Wire Technology. They provide your business with scalable IT solutions so you can focus on new revenue streams for your business. If you want more information, visit bluewiretech.com or click the link in the description of this video. So we made fun of Robin a little bit. Now I'd like to talk a little bit about XRP Ripple. And guys, stay tuned because we're going to randomly patch Robin in. You never know who you might be with. So we had this yesterday, okay? So we had the judge ruled against the SEC, right? The SEC didn't want the Hinman emails to go public. So they filed an appeal. The judge said, pretty much gave him the middle finger. Now, both parties, both Ripple and the SEC, have filed a joint letter for an extension. And a lot of people are speculating that that means there is a settlement coming. Could the Hinman emails have been that damning to the SEC's defense or the SEC's case that they might now want to come back and be like, okay, fine, we'll settle. We'll kind of take an L here, but publicly make ourselves still look good. It's kind of interesting. Forrest, if we were to speculate here, and now we're not going to sit here and act like we know exactly what's going on or we're plugged into this whole Ripple case as far as insider info. But if you look at it from just a base common sense, if you were to connect the dots, judge rules, the emails can be made public. Now there's a 1 week extension before the summary judgment. If you were to speculate, if you were to put your money on an outcome, would you bet that this is because they're trying to settle? Is there some what are your thoughts on this in general? You think this is bullish for Ripple that they both asked for an extension? What are your thoughts in general?
Yeah, I do think it's bullish. What I will say is I just don't know enough about court proceedings to know whether or not this means that the end of the case is near. It feels like over the last year, we've constantly been getting teased with, we're going to have this is going to be settled on this date or in the next month or two. I forget who it was that just straight up said, who was it? Somebody famous was like, this is going to be settled within the next 2 or 3. Oh, it was Charles Hoskinson, wasn't it? I think it was Charles Hoskinson a while back that said he had heard that the case was going to be settled soon and then it wasn't. And I feel like it's just constantly just right around the corner and the can gets kicked down the road. I hope it gets settled sooner the better. I want clarity on this. It looks really good for XRP. If XRP does win or there's a settlement that is, in their favor, I think XRP is going to pump and it could help the entire market pump. But obviously, XRP, I can see over a short period of time, 20, 30, 40% right out of the gate. And, obviously buying XRP now, you're speculating and it could be months before it settles. But if it's a favorable outcome, you will definitely be rewarded in the short term for holding XRP, I think.
Yeah, and here's what we got to remember too. We covered this on the show. I believe it was yesterday or the day before. The lack of liquidity in the market, right? You have market makers like Jane Street and Jump Crypto. They're kind of scaling down. I read an article this morning. We're not going to share the article here, but there's a mass outflow of stablecoins. So stablecoin liquidity in the market's going down as well. If you have an event, a shock to the market like a Ripple victory or a settlement in their favor, and now people start FOMOing in, I honestly believe if, let's say, Bitcoin's at 27K, I think that thing can, if it helps the market like we all think it will, a Ripple victory, I think we can see a move like 27 to 32K in a matter of a couple hours. I really do. Low liquidity, people FOMOing in. I mean, what do you think? You think I'm crazy for saying that?
No, not at all. I think most of the benefit will come specifically to XRP. And if I'm being quite honest, XRP chart's starting to look pretty decent. You can see just some accumulation and an uptrend forming. If we get a positive resolution, I think it'll be predominantly XRP that benefits the most, but it could be the rest of the market too, just because the SEC is taking a big L on the whole securities front, or trying to say that crypto are all securities, and it'll probably be a path that leads to more clarity. So I could see the entire market pumping as a result. But yeah, definitely XRP starting to look more and more attractive here.
Now, do you mind showing the XRP chart for us, and maybe what you're seeing as far as structure on the chart? Can you tell from certain candlestick patterns or how a formation is forming? Like, can you kind of tell, okay, people are gearing up for the settlement, or does it paint a picture for you like that to be able to like draw a narrative out of, okay, the structure of this chart is saying this is what people are doing, or not really?
Yeah. So just first thing I like to do is just take a peak of the easy bands. And the easy bands have actually been a really, really good way to trade XRP in the past. Sell when it's in the red, buy when it's in the green, just because of the volatility. But usually you don't peak too far out of either side of the easy bands with XRP. That being said, we're actually finding on the weekly chart really nice support on the middle easy band, which is the 21-week simple moving average, which is commonly referred to as like your bull market support or your bullish trend support. So we get rid of the easy bands. Other things that we just see from a quick glance is just this really solid uptrend developing. It means every time XRP comes back down to test a lower level, buyers come in at a higher and higher price. And again, we've recently seen them come in off of this 21-week simple moving average. So we pumped through the 21-week simple moving average on the weekly. Before we held it as resistance, we fell through and held it as resistance. We held it as resistance a second time. Now we pumped through up to the red easy band. Again, a great time to be taking profits up there at like 58, 60 cents. But now this time we've come down to the 21-week simple moving average, and we're printing a really nice green weekly candle there. The uptrend here is still very much intact, and we're actually seeing a more aggressive uptrend form off of our most recent two lows, right? So that is really, really constructive. We also see the weekly RSI is in a really nice uptrend. And one of the things that you want to see with RSI is you want to see a break through the 50 region and a hold of the 50 region, right? That's usually a pretty decent trading strategy on some of the longer term timeframes, is just to flip long when you break through and hold above 50 RSI. Right. So we are in my opinion, a bullish trend for XRP. And it's actually really reminds me of kind of this trend here before we exploded upwards back in November of 2020. Now, obviously, we were moving into a stronger bull market for all of crypto back then. And, maybe we are right now. But regardless, I do think XRP has been historically very explosive in nature, and we get a positive decision out of the SEC Ripple case. I mean, we could take a visit up to these red easy bands really quickly, and that's anywhere between 66 cents and $1, pretty much overnight, and we're sitting at 46 cents. So that would be kind of in line with that 2x level, that 2x kind of overnight pump or quick pump that we were talking about yesterday would be my prediction. I think XRP looks pretty solid right now. You could make the case for a long. You'd want to have that stop loss somewhere down here. Below these trend lines, below the 21-week simple moving average. But I don't hate speculating on this, to be quite honest.
Now, Forrest, Crypto Pew Pew Cruz said in the chat, a settlement does nothing for the rest of crypto as it still leaves no clarity. Ripple needs to win. Do you share that same sentiment? Or do you think a settlement is enough for the market to be like, all right, the SEC pretty much lost? If they had to settle, they went to court for 2 years, they brought a lawsuit, they end up settling, and XRP, the token, was deemed not a security, even though it's a settlement. Do you think that's enough for people to be like, okay, yeah, we're good? Or does Ripple have to flat out win?
Obviously a flat out win is way, way, way better. But I think it really depends on the terms of the settlement, right? If XRP just gets slapped with a really small fine and they nothing else, and that's it, and they just say, hey, we had a problem with this one, the way you raised funds with XRP, or the way you handled this, or your percentage allocation, whatever that is, I think will provide some clarity to the market. But it really just depends on the settlement. If it's heavily in favor of Ripple, then I still think it'll be a big positive for the overall market. If it's more 50-50, then it's probably not gonna help the rest of the market too much.
Yeah, for me, my stance is, why would Ripple go through almost 3 years of this, spend $200 million to just settle and not get what they originally wanted, or get as close to their original intent as they wanted? It, to me, that just doesn't make sense. So unless it's a settlement heavily in XRP's favor, I think it's going to take this thing all the way, in my opinion. It's like you're at the finish line. Why not just blow right through it instead of just like, okay, we'll settle. We'll give up this. We'll give up that. So
for sure.
That's kind of my take on it. Everyone's going to have their own opinion. Love or hate XRP. So, but we are going to check in with our correspondent down in Miami. Rob, what you got? Hold on, Robin. We got to.
What's up?
Go ahead, Robin. Go ahead, talk.
Go ahead, talk. Yeah, you guys hear us?
Yeah, move the speaker back a little bit.
All right, guys, I ran into Brian. This is the CEO of the Kite, and also so he's a little bit into the mining side, or the hash rate side, or at least his business model is, and so not the hash rate miner guy, institution, but why don't you tell us a little bit of this, what you do?
Let's cut away from this because this is pretty bad.
CEO of Kite, founded at Kite.io. We do private mining for large miners. So we specialize in maintaining mining Bitcoin. We are sponsoring the development of peer-to-peer routing. That means with miners, and we're doing the peer-to-peer centralized hash rate exchange. So anyone anywhere in the world can buy hash rate and mine Bitcoin with this centralized contract.
All right, if I had an ASIC sitting in my garage and I want to plug this thing in and contribute some hash rate, is that some kind of services that your company would provide, or can you help me out with that hash rate?
Yeah. So at the end of the day, you just go to Lumer.io, download the wallet, you plug your ASIC to the wallet, and it would mine straight through your default mining pool. Then from there, you create a smart contract on the marketplace for your hash rate up for sale. If anyone buy that through the Web3 wallet, they can, and your node will automatically screen your hash rate to the buyer real time, and you can sell your hash rate for the highest profitability.
David, let's get that miner out of the closet. Let's put this thing in, baby. And now we are in the art gallery here, and we started our show, kind of gave a little review of this. What's your first takeaway with ordinals? Do you think this is gimmicky? Because it seems like it's here to stay. And is it attacking the Bitcoin network, or is it helping the Bitcoin network? What's kind of your overall stance on NFTs and basically?
Using the Bitcoin network, which is fantastic, right? We want people to use the network. Everything from Bitcoin backing to anyone in the crypto space, the network. Because at the end of the day, the tech can be completely shit, and it doesn't matter. What matters is you use it. So I don't care if you're using it for portable, if you're using it for payments, if you're using it to buy a cup of coffee, or you're using it to hold billions of dollars that isn't safe somewhere. It doesn't matter. If you're using the technology, that's where it's going to start.
All right, well, thank you so much. I appreciate it. All right, this is Little Rob sounding out.
There you go.
Yeah, little Rob, a little choppy on the audio. Well, we're gonna get that better. Robin, get on the Wi-Fi, man. I'm sure they have Wi-Fi down there in Miami. But what I got from, and we're gonna have to work on the connection issues on that end. But what I got is people are excited about this ordinals thing, and I'm kind of gonna just lead right into this. Even Michael Saylor, and I was kind of surprised at this, right? Because in some sense, he's been pretty bullish on Lightning, which we know is centralized, right? Forrest even tweeted on his Twitter, just in case you're wondering, your Bitcoin that you have through if you use the Lightning Network is held at a custodian, a third party. And so it's interesting to me that Saylor, who's been so pro Bitcoin and anti the rest of crypto, is bullish on these centralized solutions for Bitcoin. MicroStrategy is looking at Bitcoin ordinals for app development, says Michael Saylor. Maybe we'll ask him about this live here today. Maybe, who knows? Michael Saylor said the company isn't just aware of ordinals, it's interested in how the protocol that set Bitcoin's community abuzz could lead to software innovation. Saylor exclusively told Decrypt that the software firm is looking at ordinals and assessing its potential in terms of application development. This is from Decrypt, by the way. One recent innovation in the space leveraging ordinals is an experimental framework for building tokens on top of Bitcoin. The discussion surrounding ordinals is important, Saylor said, because, quote, Bitcoin miners have to be successful over the long term. He added that the development of applications building on the Bitcoin's functionality could also bolster the coin's overall adoption among individuals, firms, and governments. Forrest, are you surprised that Saylor is so bullish on stuff outside of just Bitcoin being an inflation hedge or Bitcoin being a store of value or Bitcoin being the hardest money asset in the world? Or do you think this kind of makes sense?
I think it makes sense. It's really difficult to be against it, right? It's to say, because if you're against it, it's like it can't really be stopped. Unless, the Bitcoin core developers come together and all the miners decide, hey, we're going to fork Bitcoin to remove the Taproot upgrade that enables ordinals to happen on Bitcoin. For anyone who's not familiar with ordinals or BRC20 tokens, all they're doing is they're going in, and this is a very cursory explanation. They're going in and they're taking an individual Satoshi, right? Satoshi is the smallest unit of account within Bitcoin. It's like 0.0, they're like 8 zeros and then 1 Satoshi, or then 0.000001 Bitcoin is a Satoshi. They're inscribing it with metadata, like JSON metadata, like, just like text data or image data or whatever that is. And that image or text data is attached to that Satoshi moving forward, so that you can, have an image or NFT or ordinal or a certain, fungible token. If you tag a bunch of Satoshis with a singular or with a singular, like token identity. So it's the wrong battle to fight if you're trying to fight it, in my opinion. The reason being is because all of this network activity, in all of the transactions that it costs to mint and trade BRC20 tokens and ordinals, costs money, and that money goes to the miners, right? And ultimately, the miners decide the future of Bitcoin, right? Like, you cannot fork Bitcoin without the support of the miners. Or the miners, whatever fork it makes the miners the most money, that's what the miners are going to support. So this implementation of Bitcoin, like ordinals and BRC20 tokens, it costs transaction fees that goes to the miners, and the miners are going to make more money, so the miners are always going to support it. So I don't think you can argue against this being, this is good for miners. So the miners are going to support it. It's a battle that you're not going to win, in my opinion, if you try to fight it.
Yeah, and I forget who it was. They brought up the fact that they can fix this network congestion issue. You did mention ordinals are just inscribed as JSON files, or I'm not a big dev or tech guy, but apparently that clogs up a lot of that uses up a lot of the capacity of the up to 4 megabyte block sizes. So someone said there's another way to do it, and which should have been done from the get-go. And so they're looking to move it that way. But I agree with you, right? These miners have spent millions of dollars on ASICs and building out these mining rigs and these farms and this and that, and all the time and money and resources put in. You're not going to all of a sudden be like, hey, I know you've been making more money on transaction fees than your block rewards. We're going to yank that away from you. No way. Like you mentioned, miners control the Bitcoin network. Now, I want to ask you, does that mean, everyone says Bitcoin is the most centralized or decentralized. Can we say that in the same breath? Bitcoin is the most decentralized network out there. And then in the same breath, say miners control the network?
Yeah, it's an interesting. It's a little bit semantic, but it's an interesting argument to have. It's like if you don't mine Bitcoin and contribute computing resources to Bitcoin, you really don't have much of a say. Like, unless you're just like a big person, a big influencer, a personality who can actually sway the opinions of miners. Ultimately, I mean, the miners control the network, and it's more like decentralization is a spectrum, and I don't think we are anywhere near like the furthest ends of the decentralization spectrum on anything right now. Like, there's still, is Bitcoin the most decentralized? It's certainly up there. It's certainly up there, but if not the most. But you're always going to have some levels of centralization in terms of the participants that actually control the network. I mean, if you actually look at the number of miners out there and like the unique, the who controls 51% of the hash rate, it's not like it's like a million entities. It's not like it's like a million different people. These pools, it's like, I think, I haven't checked in a while. It might be 3 to 6 in terms of the pools. And obviously each of these miners are individuals, and they can pull their mining hash rate out of a pool and decide to support a fork of Bitcoin, or not support a fork of Bitcoin. But at the end of the day, yeah, decentralization is a spectrum, and true full decentralization is something that's really, really difficult to achieve. I still do think that Bitcoin is decentralized. However, it is also controlled by the miners, like the people that are actually contributing to their money and resources to the network.
Here's the cool thing, though, is we can trust, and we can be like coming to understanding that miners are not going to do anything to jeopardize Bitcoin. Because at the end of the day, those block rewards is how they make their money. So you're not going to destroy the very thing that is keeping you in business, because if that goes away, then so are the transactions. People stop using the Bitcoin network, you're screwed, and that's not going to happen. Someone in the chat, who was it? SDog21 said, is Rob short, or is everyone else at the conference really tall? Forrest, you've met both of us. How would you answer that question? Is Rob short, or is everyone else at the conference really tall?
I don't think Rob's short. Honestly, I couldn't even tell you what his height is. Yeah, I know you're tall.
Short. He's short, for sure. That's why I make fun of him. Big Rob. There's nothing big about him except his ego. It's interesting. Now Rob's I think 5'8", 5'9" or something. Pretty average guy, He ain't big though. I'll tell you that for sure. 5'8", yeah. 5 foot less. All right. Let's get into. So I found this. Is this kind of, it's not like intriguing, but it's just like, wow, this is what people have to do because of the state of their economy due to the decisions that the politicians and the central bankers are making in their country. And that is Argentina. The metal in the $2 Argentine peso is worth $12. So people are literally dismantling their own currency just to pull some of the metal out. And here's the video.
Esta moneda de 2 pesos, le saco esto y esto solo nomás vale 12 pesos. ¿Por qué comprar la moneda? Me dicen, mira. Vale más por metal que lo que vale la moneda.
So the little ring, the metal ring around their currency, the coin, the $2 peso, is worth $12. And so and all kind of so they're essentially destroying their own coins to be able to harvest some of that metal that's worth more money than the actual currency is, because here 108% inflation in Argentina. Guys, Argentina is not a third world country, right? Interest rates 97%. So this is man, this is crazy, dude. And then we have this as well. Janet Yellen. It's funny, and this is why for me, it's like, we know we're in this space, right? We're not some macro gurus, or we don't follow the US government or whatever, but there are people in traditional finance that do. And so when these banks are out here like, well, we didn't hedge our interest rate risk, or we decided to continue to buy 2, 5, 7, 10-year treasury securities because the Fed said that it was transitory, they change their mind every 10 minutes. Weren't Janet Yellen and Jerome Powell just saying everything in the banking sector is fine? And now she's out here saying more mergers may be necessary. Forrest, can we see inflation start to tick back up? Are you on the side of banking sector is going to be fine, or this thing is far from over and we're going to see more ripple effects, especially, you know, this commercial real estate whirlwind tornado finally comes to a halt? What are your thoughts there?
Yeah, so this is such a tough question to answer because there's just so many variables to all of these things. If you go to Truflation, inflation's actually tanking. It's down to 3.15%. So you're back within the bounds of, 3% inflation. I mean, you can deal with that. 2% is obviously the Fed's target, but 3% is not like historically setting off massive alarm bells. Obviously, it's uncomfortable. It's far from the target. 3% on inflation is not ideal, but we've yet to see the Fed actually pause or pivot yet. And we know that this is very the Fed's decisions have a very lagged effect in the market. So if the actual real-time inflation, and I'll share my screen here, according to Truflation, which has been pretty dang accurate, the actual real-time inflation right now is truly 3.15%.
Before,
and the Fed is yet to pivot.
Do you buy that? Like, I don't know about you, bro, but I'm still going to the grocery store and I'm paying more money for my items than I did a year ago. And so whatever numbers we see, and I'm not sure exactly how or where Truflation get its numbers from, but, like, are you not going to the store and still paying more for stuff that you were paying less for months ago? Do you think that's just inflation is coming down, but there's just a new price point? That, because obviously when these companies raise their prices to fight off inflation and supply chain issues, they're not going to bring the prices back down, right? Because now people are used to spending $8 for a dozen eggs or $6 for milk. Do you think that's what's happening? Or these inflation numbers, whether it's Truflation, whether it's from the Fed, it's all just complete BS?
Yeah, so it's just year over year, right? And I'm almost positive that's Truflation's calculation there. It's year over year. If not, like, there's some formula to take into account the last 2 years. But yeah, so like once eggs reach $5, this is just saying that compared to a year ago, it's 3% higher on average across the board for everything. And they're getting their data from a number of different sources. So they're pulling it from like Zillow for housing data, Trulia, Car Gurus for like, automobile data, AAA, Opus, Statista. So they're pulling more real-time data across the board. So if you want to actually see prices go back down, then from where we were a year ago, right? Then we're dipping into deflation. And deflation has its own set of issues, and I think that's, if this trend continues, and the Fed doesn't pause or pivot soon, and even if they do, with the laggard effect, we could move into a state of deflation where we actually start seeing prices start going down across the board again. I know the used car market, I believe, is one, and I don't know if I can pull the chart up. Transport. I don't know if I've got used cars, but I believe the used car market is one that is just absolutely tanking, and houses. I mean, we've already seen the housing market, the prices start to come down. We've seen oil prices compared to the high oil prices we had a year ago, already come down significantly. So across the board, you take into every, groceries may still be fairly expensive or in line with where they were a year ago or slightly more expensive, but there's a lot of sectors that have softened quite a bit and prices have actually come down from where they were a year ago. Definitely an interesting, I forget what the original question was, but it's getting interesting out there for sure.
Yeah, it was whether the numbers are BS or if we are actually seeing year over year inflation come down. We do know they changed the metric of how they measure CPI headline inflation. It used to be an average of the last 2 years. They just changed that to 1 year starting this year. And we know that year after year, the basket of goods changes. So as consumers, they start buying less of, let's say, steak because steak becomes more expensive. Now, the following year, steak is out of that basket of goods, and the cheaper items people were buying is now in the new basket of goods. And so that's why I don't put too much thought into the CPI inflation, what that means, because I think the numbers are fudged. I don't think it actually represents the inflation rate and what people are paying. All I know is I'm still spending more money on items, on gas, on food, on services than I was a year and a half ago. But we do have some potential good news. Jerome Powell had a speech today, and we didn't pull any clips from the speech, but we have this from Yahoo. Federal Reserve Chair Jerome Powell hints at a pause in rate hikes when central bank meets next month. A couple of things I've highlighted here. Chair Jerome Powell indicated Friday that the Federal Reserve will likely forego an increase in its benchmark interest rate when it meets in June. Having come this far, this is what he said, having come this far, we can afford to look at the data and the evolving outlook and make careful assessments. The Fed chair also suggested that the risks of doing too much versus doing too little are becoming more balanced. Okay, so a lot of people took that as a pause is coming. Let's take a look at what the CME thinks. 86% of people believe that we are going to see a pause in the June meeting. Now, June meeting, FOMC meeting goes 2 days. The first day they discuss, second day they also discuss, but that is when the rate hike is announced or lack thereof is announced. Whatever decision they make, the CPI numbers come in on the first day of the FOMC meeting, so they'll have time to digest that information. We'll see what happens. Inflation has been trending down, but a couple of metrics I want to share. What has been trending down as well, but not necessarily a good thing, is the M2 money supply. That has been shrinking since we saw a peak back in mid-2022. We saw a peak in mid-2022, and it's been declining ever since. This is not good for the economy, although we talk about the M2 money supply skyrocketed. Well, you start seeing shrinking, that means your economy shrinking. It's not good. Money is being siphoned out of the market. Banks are lending less money to people. People's delinquencies, credit card delinquencies are rising. Savings are plummeting. Interest rates are so high. People are literally using their credit cards to supplement for inflation, to supplement for the food they can buy. It's not like they're using their credit cards to go travel. They're using it to buy groceries. They're using it to buy gas to get to work. And so it's an issue we're going to continue to see. And just be careful out there. Just be careful out there, guys. Forrest, do you think we're going to see a pause? I was listening to, I believe it was Peter Schiff, or someone said, what you don't want is interest rates to start getting hammered down, like to just see massive cuts in a row. that could also be bad for the economy. So it's like the Fed is stuck between a rock and a hard place. But do you agree with the CME in that we're going to see a pause? And what do you think that could do to the risk on markets, including Bitcoin and cryptocurrency?
Yeah, I think we'll see a pause. The market thinks that with what, like 83% certainty, I
86.
think is what you had pulled up. 86. So I personally think it would be reckless to continue to increase rate hikes. And the reason being is because we've got that trueflation data already coming in at 3%. So the more real-time data that isn't as lagged as it's more real-time. It's not lagged like CPI is. And then if you just look, I'll share my screen here. If you just look historically at the relationship between the Fed funds, this is the Fed funds. Let's just make sure I label that Fed funds rate versus inflation. You see historically that once when you raise the Fed funds rate, and yes, it is lower than what it has been in the past, right? But when you get that sharp increase, the actual inflation rate decreases, right? Decreases well after. There's a very lagged effect, and it can take months for this to actually happen. So we saw it take months and months for inflation to actually peak once the Fed funds rate had been raised and Jerome Powell had hiked rates. I think we're going to see inflation continue to drop, probably into our 0 to 3% sweet spot. Obviously the target's 2%, but I think they're going to be happy with anything under 3%. Right. And we're sitting at a CPI readout of 5% right now, a reported rate of 5%. But again, that is lagged. Trueflation has us already knocking on the door of 3%, and we haven't cut yet. And we know that historically, even once you start cutting Fed funds rate, you see inflation drop significantly after, right? During those cuts, you still see inflation cut. So it's a very blunt instrument, as Jerome Powell calls it frequently, and it has a very lagged effect on inflation. Even here, after the Fed funds rate peaked, we saw continued declines in inflation for the next 1,700 days, right? So I think it would be reckless for them to hike again. Several people, Elon Musk obviously being one of them, has been a critic of the last several hikes. Obviously, Elon Musk wants risk on markets to perform better, being the CEO of Tesla and whatnot. But he's also I think he has a point in that it's not necessarily a good thing you start going too far to the downside and overshooting this inflation target. You start going into deflation, that creates its own set of problems. So I think we're gonna get a cut, or not a cut, pause. I agree.
And the whole thing is, to truly beat inflation, you want the terminal rate to be at or above what the inflation number is to really fight inflation. We're there now, right? CPI came in at 5. We're at 5 to 5.25 on the terminal funds rate. But guys, what is going on today, man? We got 89 likes and over 200 people watching. If you're watching and you're here, I know you like the content, or else you wouldn't be here. So help us out. Hit the like button. See, one of our community members, Jessica,
something funny to laugh about. So show
yeah, I got something funny to show you, but I don't want to show you if you don't like it. And how do I know you like it? By liking the stream. What does liking the stream do? Well, it tells us that you like the stream. It also helps YouTube know you like the stream, which they will bring more people in here. And that's how we grow as a community, as a channel. You guys want a Vegas meetup? We're going to need more likes. You guys want giveaways? We're going to need more likes. You want Forrest to continue to join us? You want more Robin from Miami? We're going to need more likes. Help us out, guys, please. And thank you. With that being said, we have breaking news. Gary Gensler, Ripple. The SEC calls for emergency settlement meeting with Ripple after Judge Torres ruled on the Hinman documents. And this is what we got.
5, 8, 9. Calling house is late. Where the hell is he?
Today is a good day.
This has those Balenciaga vibes to it, Anyways.
Red, you came.
The deal is off. He's not the MIT Gary. That's his evil twin brother. Look at his skin, David. He's transforming. Get away from him. He's a lizard man, David. He's a lizard man.
I can't believe it. Oh my God, Brad. That's not Gary Gensler.
Get away from him right now. Flip the switch.
I'm trying.
Do it now.
It's stuck.
Flip the fucking switch.
$508 at $14. Okay. Wow, that's a lot. Yeah, settlement's coming, I guess. All right, let me see if my like message resounded with everyone, and we're up to 119 likes. Thank you guys so much. We appreciate that. All right, let's get into the crypto markets. Unless for Rocco, unless our correspondent's not ready yet. Okay, he's apparently doesn't want to pay for Wi-Fi because he's cheap. Anyways, let's take a look at the crypto market, see where we're at. We're coming in at $1.125 trillion in total market cap. Volume still below 35 billion at 30.7. Bitcoin dominance 46.3 and ETH dominance 19.4%. Pepe is trending yet again. News came out that they just got a listing on Bittrex. Yes, that is the exchange that filed for bankruptcy here in the US. That was ousted by Gary Gensler and company. They are listing Pepe. Forrest, seriously, okay, this is a serious question. Can Pepe be the third meme coin that is here to stay? I mean, they're getting exchange listing after exchange listing. The community seems to be pretty strong. Does it have what are your thoughts? Can it even maybe supplant something like Shiba Inu? Do we need two dog meme coins, or can we have a dog and a frog, or can we have two dogs and a frog?
Look, I have no idea if Pepe is going. If Pepe's here to stay. All I do know is, to me, it's tougher to value as an asset. And it just trades very technically. So I've personally just been shorting it, shorting the resistances. But as far as whether or not it, takes a spot in the top 40, top 30, top 20 cryptocurrencies by market cap, that is up to the market to decide. What I will say is I do think that these meme coins are a little bit commoditized in the sense that, what's the thesis for owning Shiba Inu versus Pepe? They're probably very similar theses. They're both meme coins. You can kind of get behind the Doge thesis because of Elon Musk is such a fan, and maybe he integrates it into Twitter. I think it's not a great investment thesis compared to what a lot of the other opportunities out there. So the truth is, I have no idea what Pepe is going to do in the long term and what kind of valuation it'll fetch. What I do know is a lot of people are down bad on it. It's going to very likely act like a lot of other meme coins where you have huge pumps and then just long-term bleed outs. So my strategy is going to be to continue to just short resistances because I think it's trading pretty technically.
What about longing the support, man? You're not going to put any longs in on the support?
Not longing the support just because these things
bro.
are they just take forever. They,
That's
like
biased.
if you long the support, they can just bleed sideways below the support levels and just stop you out slowly and then pump. So for me, from a technical trading standpoint, I like to short these because the short level, the resistance levels, you get faster, harder reactions out of them than you do the support levels.
Are we just gonna have to accept meme coins as part of our space? Like, I know there's tons of people that absolutely hate it. They say it brings negative press. People laugh at us about it. It makes us like the laughing stock of the investment world. But are we just gonna have to deal with it? Is it just part of us and we just have to get used to it?
Hey, I mean, I don't judge people for where they want to put their money. At the end of the day, it's a free country. I guess these are somewhat global assets, but look, you can put your money wherever you want it within reason. I don't think it hurts anybody if you want to gamble on Pepe. I sit out on these. I don't, if I ever feel like I have a drop or I think so, the one will pump for one reason or another, maybe I'll invest, but they just don't fit my personal investment thesis. But I have no issues with other people buying them. I don't like,
What do you,
yeah, is it not great for our space from an image perspective? Sure. But I mean, to me, it's like, slot machines versus poker. Poker's a game of skill, and slot machines are a game of chance. So
but here's what, but here's the other side of that argument, Forrest, is people are saying it's drawing liquidity away from projects that are actually looking to push the space forward. So that $1.5 billion that was invested in Pepe could have gone to projects like Ethereum, Solana, Bitcoin, whatever the case may be. And now it's hindering our space because that liquidity is flowing to nonsense coins that don't do anything. What do you say to that point?
I'd say capitalism. I'd say Solana and Ethereum should, provide more value if they don't want to leak liquidity over into meme coins. So I'd say it's a competitive market, and people's attention are being drawn over to Pepe because of marketing or because people think it's a better opportunity in the short term than Ethereum or Bitcoin or Solana or AVAX, whatever. Insert top 10 cryptocurrency here. It's a free market, and people are going to put their money wherever they want to. To me, it's no different than people aping into GameStop, right? People are going to put their money where they think the best opportunities to make money are. And if they think they have a better opportunity and better risk reward in Pepe, they may be wrong, but as long as they think that, then it's just a competitive market and people can do what they want. I don't think we should be regulating against meme coins and, saying people can't buy meme coins. I think that would be a mistake.
Yeah, Yowzer Donkosaurus, so whatever. Said many people who enter Pepe end up buying some other coin. Also said when Pepe dumps, when people pull profit from their Pepe meme coin trades, they pump that back into the market. It could go both ways. I was just giving another side. I was just, playing devil's advocate here because there's an argument on both sides. It's just interesting to get your take on it. But back to the markets here. We have Bitcoin coming in at, cookie settings. Yeah, cookie settings, reject all cookies, go to hell. Bitcoin, $26,922, up 1.25% over the last 24 hours. ETH over 1,800. BNB 309. XRP still up 10% over the week, just under 47 cents. Cardano, man, are people losing faith in Cardano? I feel like some people are. They've seen pumps from XRP, seen pumps from Polygon, seen pumps from Solana, from Avalanche, from Ethereum, but not from Cardano. And I say to people this, you have a founder and a team in Cardano that could care less about the price of their token or their investors because they didn't have any investors. They didn't take any VC money or outside funding. So they could care less. They're focused on building use cases and utility for their network. Now, whether people are going to adopt that or not, the market will decide that. But Cardano is not a token where if you want a 20x in a few months or 10x in a few months, especially during a bear market, I don't think that's the coin for you. But if you believe in technology and what they're doing, Cardano is great. Doge, 7 cents. Solana, $20.48, up pretty even across all time frames, 1 hour, 24 hours, and the 7-day. And Polygon Matic, 87 cents. Now, Forrest, you've talked about, and you even did a paper on this, anchor prices, right? Psychological anchor prices, right? And one we talked about was Polygon at $1. Well, what happens when a coin or a token loses that anchor price, that, the price that people look at, all right, this is cheap. What happens when it loses that? Is that negative? Does it take longer to reclaim that? Is like 50 cents the new anchor price psychologically for Polygon? What are your thoughts?
Yeah, so they're just like any other support and resistance level. At the end of the day, it's not the end all be all. Certainly not. It's not necessarily a level that you can't break or go below, or that's going to hold. If you look at the chart on Polygon, it's a level that's been a key inflection point as far as support and resistance goes. Same with $1.50, $2, $2.50 for a lot of the coins that trade in that range. Yeah, so ultimately, once we drop below it, it'll now be resistance on the way back up. So I'd argue that it does become a little bit more difficult to reclaim because people are used to seeing between 70 and 90 cent Polygon. That seems fairly cheap in comparison to once you try to move over $1. Now all of a sudden you're adding another digit on the left there. But it's not something. It's something that does have a modest effect, and it's proven with equities. It's been studied. There's like legitimate, well orchestrated studies on these acting as support and resistance zones on equities. Obviously, I would believe that translates heavily to the psychological behavior of trading crypto as well as equities. But I would say it has a modest effect. It's not something that's like an end all be all that you want to put your entire net worth on, $1 Polygon holding as support or resistance. But it's definitely something to keep an eye on and take into account when you're trading.
I agree. We'll see. So if Polygon gets to $1, that means you're shorting, right?
You could short Polygon at $1. I don't hate that trade at all. Stop.
Let's look at the crypto bubbles, also known as the crypto bubbles. This is on the daily. A lot of green today. Hex is up 14.2%. Injective Protocol up 13.1%. And one we haven't seen in a while, Pump, is AGIX SingularityNet, the leading AI token in the crypto space. That is up 25.5%. Forrest, can we actually can we look at a SingularityNet chart? Maybe see if it's oversold, overbought, where it's at on the easy bands, and what are some good entry and exit points for people if they are invested or want to invest in AGIX. While you pull that up, let's take a look at on the weekly. Hex was down over 50% on the weekly, but after a pretty big day over the last 24 hours, it's down to 35.9%. Render up 38.3%. Pepe up 22.6%. The China coin, aka Conflux, up 23%. And yeah, that's what you have for the week there. Forrest, if you got that chart pulled up, we can swap over to your computer and kind of take a look at AGIX.
Yeah, so we've got SingularityNet here, AGIX. You see, plenty of price history here, a really long bleeding downtrend with a couple of pumps in between. Then we start to see accumulation, right? A very
Rocco,
nice.
can we swap over to Forrest's laptop, please? Sorry, Forrest, go ahead.
Oh, you can see it now?
Yep, we're good.
Cool. Yeah. So long downtrend, couple of pumps along the way. And then once that downtrend finally starts to break, what happens? You start breaking through that 21-week simple moving average, consolidating above it. And then we obviously had ChatGPT launch and create this entire narrative around AI-based technology and coins. We flew way over the red easy bands, right? Way over. And when you have a really hyped up narrative, that's something that can absolutely happen. And you can even use the red easy bands as a little bit of support, right? This is when you want to start using the margin pressure levels instead of the easy bands. You just want to be in a profit taking mindset here. We haven't come down to the green easy bands yet, but we did overshoot our 21-week simple moving average, and we're testing that as resistance right now. Now, more interestingly and more useful, in my opinion, have been the short margin pressure levels. You see off of our high, right? This is initially where we found some support. We had a couple of candles go below, but I believe we have, this initial candle, this initial drop was the level that held as support. That's your 1x short margin pressure level. We move this over to the next recent high, right? We front ran it a little bit, almost came down all the way to our 1x short margin pressure level, right? And then when we move this over to our most recent swing high, right, where a lot of people are going to be wanting to hide their short liquidation points, you get a pretty perfect bounce off of this 1x short level. And now we are pressing up into both our 21-week simple moving average as well as our 2x short level. That in and of itself is a really nice zone to trade. This is where you want to long down here, and you want to cut that long at this 2x short margin pressure level. Now, I don't know if AGIX is going to start a really nice uptrend again or not. I know there's been some developments in the AI space that people are excited about. obviously this is pumping super hard today. I think Palantir had some AI stuff. I believe Google dropped some AI stuff. So this is definitely, AI is getting another narrative, so to speak. But from a technical perspective, this is where I'd want to have cut that long trade if you entered it at this 1x short margin pressure level. And oftentimes you can range in here for a little while.
Awesome, Forrest. Thank you for that. And we're going to check in with our correspondent here down in Miami. Rob, well, it's, yeah, we're ready. Let's patch him in. Wow. Hello, Robin. Hello.
Hello. What's up, guys?
Hey, you can speak.
Yeah. So, having internet difficulties. Too many people in the convention taking all the bandwidth. So I found a little conference space here, a little better connection. I'm gonna get back to the festivals. Just wanted to say bye to all the viewers, and tomorrow we're gonna pay for some exhibitor Wi-Fi. So we'll be back on tomorrow.
Tomorrow's Saturday.
Anyways, I just wanted to shout out.
You gonna live stream tomorrow? Is that what you're saying?
Yeah, tomorrow we'll be on with a Wi-Fi signal tomorrow.
Okay.
Wanna drop any olas? For
All right, guys. Well, and then for the people here, hola!
Hola. And hola adios. See you later, man. I'm interested to
All right,
see
guys.
what kind of, I know you're going to an after party tonight too. Curious to see what kind of other shirt you got. Are you going to outdo yourself, or just make sure you take a picture and post it on social media again so we can make fun of you?
I'm actually gonna go shirtless.
Wow.
Oh, keeper style. Okay.
Keeper style, huh? They might have an extra vest they
That's
brought
right.
with them. They might have an extra vest. Ask them for that vest.
We should ask the chat.
Now
what
we
kind of
are.
shirt.
I have been. Even though the internet's a little choppy, we've been recording videos as well. So there's a lot of content coming out from here. So make sure you got notifications bell checked, and stay tuned.
Wow. Thank you for that, our correspondent. And next time we'll send you out with some more money so you can buy the Wi-Fi, okay? Thanks, Rob.
Please.
Please. See you later, bro. Oh, man. All right. Okay, so what were we talking about? Oh, yeah, the markets. Is there any other, before we move on from the markets for us, is there any other charts that kind of caught your attention, or maybe if you want to show a Bitcoin one, or maybe something like a trade you're in and how that setup came about?
Sure. Yeah. Take a peek here at Litecoin, and I'm currently still in my Pepe short. I'm happy to go over that as well. So what I've got marked out here with these vertical levels are just the halvings historically for Litecoin. Now, Litecoin has definitely faded in its relevance over the years. Obviously, for anybody who's been in crypto a really long time, like Litecoin used to be number 2. Like it was just behind Bitcoin in 2014, 2015. Like people viewed it as like the silver to Bitcoin. Really, it's just basically number 2, right? People viewed it as like the silver, to Bitcoin's gold. So we see historically, at least the last 2 times, pretty strong rallies into the halving, and usually you peak right before the halving, and we're starting to get to that period of time where 56 days before the halving, 56 days before the halving, right where are we at right now? We are not quite. We're a couple weeks away from being 56 days before the halving. So, are we going to peak this time exactly 56 days before the halving? Maybe, maybe not. But we are in that kind of sweet spot where you might see some fireworks. You might see that last little blow off top. And if we do get that aggressive move out of Litecoin, taking our margin pressure levels from our big lower high or swing high, we'd actually get a target of $147, which is really close to that psychological level of 150. So that would be a more aggressive target. Obviously, we're sitting at $92 right now, but if Litecoin really caught wind, really caught fire and started moving, we could see a little pop up to 150, and I think that would be a really good place to look to sell some of your Litecoin bags if we do get if we do get that move. As far as Pepe goes, let me go over here. We'll have to go down to like the hourly chart. So I was fortunate enough to get a really good entry on Pepe actually, and we'll get our long margin pressure levels here off of our swing low. And yeah, I was just trusting the margin pressure levels here. So off of our swing low, we came up and tapped this resistance level pretty much perfectly. I think we might have front run it a little bit, but oftentimes I put my orders in a little bit below these margin pressure levels just to make sure they fill. It got filled. And thus far, my original target was actually just this 3x long margin pressure level. But the way we slammed into it and just continued to bleed off below this 3x long margin pressure level, and we pretty much failed to hold above it. It just has been showing more and more weakness out of Pepe. Like we got a Bittrex. They got a Bittrex listing today, and like it's not doing anything. It's not moving. So I've got my stop losses set up in this region. And if it comes back up and takes me out, then I still have, captured a huge trade. But otherwise, I do think this level could actually hold as resistance, and we could continue to go lower, maybe even retest, some of these, this most recent low. So this has been a really good trade for me. That's around 25% plus, multiplied by the leverage I'm using. I believe I'm using 7x on this trade. But we could certainly see a full 50% decline from this most recent resistance point if Pepe really just continues to bleed. Otherwise, I've got profits locked in and just straight up using margin pressure levels. Nothing fancy here whatsoever. Just knowing that was going to be a big structural resistance point, as well as those longs really getting exhausted and just looking to short this back down. Nothing too crazy.
Speaking of Pepe, we do have video of what kicked off the Pepe bull run, and we're gonna cue my laptop here. And, this is
Pepe to the fucking moon! Pepe to the fucking moon! Pepe to the fucking moon! Pepe to the fucking moon!
What is he saying? Pepe to the effing moon, or?
Yeah. I think that's what he's saying.
But man, that just goes to show you, like, it's just people, right? People love it. People spend their money
in New York. What?
Yeah. All right, let's move on. So we have this piece of news. Biden plan to tax Bitcoin miners won't work, says Marathon Digital CEO. Source from The Block. The administration of U.S. President Joseph Robinette Biden announced a proposal to tax American Bitcoin miners. A lot of people are saying that goes against the First Amendment. But that policy approach, if implemented, will drive mining firms outside of the country and won't raise the intended funds, according to Marathon Digital's chief executive officer. Bitcoin miners will just leave the U.S., which is really what they're trying to do. That's what CEO Fred Thiel said. He went on to contend that a mining tax wouldn't result in more available renewable power. Now, we know the whole narrative has been the miners are using all the renewables, not leaving any for the average person. Said it actually creates less because if you're building a solar farm today or a wind farm, it's a 2-year waiting list to interconnect. And Bitcoin miners provide the economic incentive for those people to operate. So one interest that's at play is the banking lobby, Thiel went on to say. They don't want the crypto industry, which is disintermediating the banking industry. Do you agree with that, Forrest? Do you agree that these, because we know lobbying happens here in the U.S. and politicians, their pockets get lined by special interests who then they turn around and for that money, it's a quid pro quo, like, all right, we'll fund your campaign, but you got to protect our sector, but you got to pass law and rules and regulations that benefit us and our company. Is that kind of what's happening here? Or do you think they're truly concerned about the energy usage and the impact on the environment?
It's tough to put a pin on exactly what somebody's motives are. I just disagree with this tax whatsoever. And you guys know, and I'm vocal about not being the biggest like Bitcoin mining proof of work proponent, but I still think that if you're willing to pay money for the power, you should be able to buy as much as you want, right? It's a free and honestly, I personally don't. It's my opinion that I don't want to get too political here, but I'm not the biggest proponent of like the environmental friendliness narrative of the current administration, and people can judge me for that. That's just my personal opinion and my personal take. I get the other side of the argument, whatever. But I'm very anti-regulation in this sense. I don't think that this accomplishes anything aside from driving Bitcoin miners outside of the United States, which I don't necessarily think is a good thing for crypto or for the country or for Bitcoin in any way, shape, or form. I just don't think this is a productive way to regulate the crypto industry. And I'm personally not very concerned about the environmental impact of Bitcoin miners, to be quite honest.
Yeah, and in my opinion, for you to sit there in the same breath say you care about the environment but are pushing miners away from the US because they use renewable energy, like make up your damn mind, dude. Make up your damn mind, because the miners aren't just going to be like, okay, fine, we'll just sell all of our ASICs and we'll close up shop. We're done. No, they're going to go other places where electricity and energy is actually cheaper, but dirtier. So you say you care about the environment. Well, guess what? The environment is not just in the US. It's on Earth, the Earth environment. If you care about the Earth environment, you should be happy that miners are using electricity that's renewable energy. Don't sit here and say, unless you're going to try to completely ban Bitcoin, which we know they're trying to do. There's some politicians in the House and the Senate that are looking to just completely eradicate crypto. They're not even hiding it anymore. Brad Sherman literally come out and said, why are we not talking about just a complete ban on cryptocurrency? So I think it's complete BS. And then we have a super chat from Steven. I'm looking to buy one Bitcoin. Is now the time or wait later in the cycle? I'm going to throw this to Forrest. And Steven, I want you to know that this is not, what Forrest says or what I say is not telling you what to do. It's just simply kind of our opinion. Forrest, are you in the, hey, just dump it all on one, buy one Bitcoin, or do you think DCA is still the best strategy, no matter where the price is?
Sure. So I'm going to reference the chart and the easy bands for Bitcoin. Now, historically, the best time to buy Bitcoin has been in these green easy bands, especially if you touch the bold green easy band. Now, in this case, we had FTX, and that did take you for a period of time slightly below where you'd have bought at $18,000. But if you're buying at the green easy band region, you're going to be buying at a good price given a long enough time horizon. Right now, we're in an undeniably bullish trend, and you are now in a much more difficult position. And the reason you're in a more difficult position is because we are now getting to the point where you have to start factoring in the next Bitcoin halving. And last cycle, people who missed out on buying Bitcoin were fortunate enough that we had the COVID crash to give them lower prices, one last chance. Before people who missed buying the bottom at $3,000 to $4,000, they had one last chance to buy at $3,000 to $4,000 before the halving and in a large bull market. We don't know for certain if we're going to have another event like that brings us back down to the green easy bands. It's impossible to predict. We might have a recession, but Bitcoin might react positively to that recession, like we've seen in the past with bank closures and SVB going down and Bitcoin ripping to the upside. So we don't know. It's impossible to predict how Bitcoin's going to react to any major events, and it's impossible to predict if Bitcoin's going to take another trip here down to the green easy bands before the next Bitcoin halving comes around. So for that reason, if you have a long time horizon, I would say probably want to be DCAing. If your target is to invest in Bitcoin, you probably want to be DCAing and know that, hey, look, there's risk here. There's absolutely risk to if you tuned in yesterday, you saw Gareth come on and say, hey, there's risk of new lows. I personally think the lows are in, but I respect the plausibility that, hey, a nasty enough event does take us back down to the green easy bands, which are around $16,000 to $12,000 right now. So what you could be doing is you could be DCAing in slowly on a daily basis. And then if we do find ourselves in a situation where we take a trip back down to the green easy bands, whatever you have left over, whatever hasn't been purchased, whatever hasn't been DCA'd in yet, you lump some in at the green easy bands, right? So if you're just trying to get Bitcoin exposure, I don't mind a DCA because we are in a nice uptrend. We are a year, less than a year away from the next Bitcoin halving. But I wouldn't lump sum it in here. And unless you're really okay with holding for the long term and you're not going to just panic sell if this thing drops down to 16K. Again, I don't think that's going to happen, but stuff happens, right? It was impossible to predict, at this point in time that COVID was going to bring us back down to the green easy bands. It was at this point in time, back in April of 2019, you didn't know whether or not you were going to get another opportunity to buy at $3,000 and COVID was going to, take us there. If COVID didn't happen, we probably would have had something like this nice little uptrend, and you wouldn't have had an opportunity to buy it under 7,500 again. So I would personally, not financial advice, DCA in, and then if we do take a dive, lump sum in at 12 to 16K.
And I want to just say, like, and this is from personal experience as well, it is so hard when you got that itchy trigger finger, so hard to sit patiently and wait for these things to play out. But the people that do are rewarded handsomely. Also, another handsome person, speaking of handsome, is Jimmy. Jimmy dropping 10 gifted memberships. Jimmy, thank you so much for us. We had a couple questions from the community here. You were showing the margin pressure levels, and Johnny Jackhammer said, are the easy bands an indicator? If people want to use what you have been using and showing on this channel, on the show, where can they get it? Where can they find it? Is it free? You got to pay for it?
Yeah, so it is a paid indicator. You can get it at Sistine.ai. If I'm not mistaken, there may be a link in the description down there for Sistine.ai. It's to get just the indicators, it is one time $399. And if you sign up for the Research Hub, which is kind of a research product, our mission statement is Sistine Research identifies asymmetric risk reward opportunities in the market and presents them to our clients. We're going to start actually sending them directly to your inbox. It's not like a newsletter. A newsletter goes out on a regular cadence, and there's no cadence here. This is just when we find opportunities in the market that we think are good opportunities, we're going to send them to you. We're going to post them in the Research Hub. We're going to send them to you via email. If you sign up for the Research Hub, you actually also get access to the indicators as well. Our most recent play that worked out really well, we called NFT project last week. We posted it. It's called Oniforce, 0N1 Force. It was a really big project back in the NFT bull market. It hit around $1,000 to $1,200 when we called it, and it recently popped up to $3,000 over the course of the subsequent 3 days that we within 3 days after us posting that in the Research Hub. Not every single play is going to play out like that, but we've had a really solid track record of identifying some really solid opportunities so far this year. We're going to compile all of that into a nice little. We're going to package it up and make it more presentable so people can see the track record that we've had. But it's been really solid this year, and if you want the indicators, that's probably the best way to get it.
Didn't you also do a research paper on the Mad Lads?
Yeah. We posted. Mad Lads was a 6.9 Solana mint. It popped up to 90 Solana. They're currently sitting around 55. So in your Solana terms, you're sitting at an 8x right now, but you're well over a 10x opportunity there. And we provided the research as to why we thought it was going to pump and why we thought it was going to mint. But then we also provided step-by-step guide, like a step-by-step guide on all right, this is the wallet you need to download. Have, this much Solana in that wallet. Be ready at 7 p.m. Eastern time on this specific day. And this is how you're going to mint, and, provided step-by-step resources. So even if you're somebody who isn't super confident in your knowledge around how to mint NFTs or how to, we try to provide as many resources as possible. We're doing that for the BRC20 token. There's a BRC20 token that's minting, I believe, today or tomorrow. We just talked about how big ordinals and BRC20 tokens are going to be. We have a step-by-step BRC20 guide that's posted in there, and just actually posted the play today. I need to send it out. Need to send out the email later. But yeah, we try to make it as simplified as possible. There's no guarantees that you're going to make money, but people so far that have been involved this year, we've had a phenomenal track record, and that's really all I can say.
Yeah, no, we don't really shill on this channel, but I'm gonna shill. I've met Forrest and met him in person a few times. I know the work he puts into his research and what he does. And I mean, he talked about, they did a research paper on the Arbitrum airdrop, how to make sure you get qualified for those tokens. He's done them on NFTs. I mean, the Mad Lads alone, 6.9 to, let's say, even if you're still holding it, you're at an almost 10x profit in a bear market. I mean, that's pretty freaking good. And if you would have sold the top, you would have made like from 6.9 to 97 SOL tokens. And so sometimes if you don't want to do the research and in-depth yourself, it's either you spend time or you spend money. If you don't have the time, completely understand, you got to spend the money. And if you're going to spend the money on research and stuff like that, Forrest is a great guy to do it with. He reinvests a lot of that money back into research and time. And so I don't care. I'm shilling Sistine AI. I don't care because it's good.
I appreciate that.
Yeah, man, of course. Absolutely. Forrest, we're going to wrap this sucker up, my friend. As always, it's a pleasure and an honor to have you on the show. If the people want more Forrest, besides going out to the Amazon, where can they find you?
Yeah, so I'm really lately most active on Twitter. I've actually found since Elon took over, it's been a pretty solid platform for reaching people and putting my ideas and thoughts out there. So @00Forrest is my Twitter handle. You can also find me on YouTube on Sistine Research. I used to live stream every night. I want to start live streaming again more frequently, but I've been trying to put out technical analysis snippets and videos around 5 to 7 minutes long most nights. So, predominantly around Bitcoin and Ethereum, but sometimes some other, coins like Pepe and Solana or whatever's trending at the moment. So there's Sistine Research is where you can kind of get those snippet TA videos, and I do predominantly technical analysis on those videos. But otherwise, Sistine.ai is the website. @00Forrest is my Twitter handle. So yeah.
And we got that. We had that Twitter handle up there. Also, if you don't know how to spell Sistine, or you're just too lazy to go into YouTube, we do have the channel link pinned in the comments here. So make sure to subscribe to that. Also, if you're not subscribed to Sin City Crypto, why? Do yourself a favor.
As simple as that.
Apparently, Robin's going live tomorrow from Miami, so stay tuned for that because I didn't know, but now we know. Also, he will be I don't know. Is he going to do his rant and ramble? Because he's still going to be in Miami on Sunday.
I'm going to rant ramble in Miami.
Yeah, he's going to rant and ramble in his cool shirts.
Miami Vibes Ramble.
Miami Vibes.
And then somebody says it's gonna provide a tablecloth. I think it was a Crypto Billy.
Yeah.
For his new shirt.
Yeah. Also, Jimmy wants all of our socials set so he can claim us as dependents. Jimmy, been one of our biggest supporters. So we thank you. And to anyone else that supports this channel, thank you so much. It goes a long way. We pour everything back into the content, into the production, and I'm sure you can see the difference. You compare it to some of the other channels that are on YouTube right now. Also, I want to give one last shout out to channel sponsor, Cam's Blue Wire Technology. This live show is brought to you by them. If you want more information, visit bluewiretech.com or click the link in the description of this video. Guys, go follow us on Twitter as well at Sin City Crypto 1. We're also on TikTok, Instagram. We got Fiverr coming in next month. We will be streaming to other platforms like Twitter, like Twitch, like maybe Rumble. Who knows? Also, go check out the merch store brought to you by none other than the Don himself. If you're a Whale member, first and foremost, big shout out to you. Second most, you do have a 10% discount code. And so, go buy some merch. They have some lady merch. They have some man merch. They have a lot of cool merch. I'm still waiting on baby merch, Rocco. I'm trying to get my niece a Sin City. Come on, bro. I know I always put you on the spot during the live show, but
all right,
that's what I do. Okay. I'm sorry. Guys, thank you so much for tuning in. We hope you had a great time watching the show. It's been a fun week. Make sure to come back Monday, same place, same time. With that being said, Rocco, guys, We thank you again on behalf of myself, Robin, Rocco, and Forrest. We love you. Have a great weekend. Enjoy the outro music brought to you by Cassius Couvé. Have a great weekend. Peace.
Sin City Crypto. Everybody know we here for entertainment and info. Gonna show you how to get that big dough. So every day stay tapped in for big facts, no capping. With Bitcoin, if you're in, then you win. We divide the pie with no fraction. It's Big Rob, David. I split the game, but they gave it. Name the coin that's your favorite. I got dry powder, why save it? To the OGs, new beginners. Special shout out to the well members. Buy a dip, sell winners. Ain't really nothing you can tell sinners. Tune in for the latest new flavors. They gonna teach us mean coins. They polarizing like barbecue chicken pizzas. I laugh with a major grin. Laggers, we trade them in. Baddies, they came to sin. And sinners gon' play to win. Screaming hola till my bags are flowing over. Hold ya to the moon and to the solar. Won't I? Don't be letting FOMO control ya. It's over when the finger tornado